StockMeter.com studios here in the beautiful Black Hills of South Dakota. I'm your StockMeter, Brian Johnson, and we finally got a break of those lower levels we had been watching and waiting and watching and waiting and watching and waiting, and finally got it today. Now, it wasn't a major break by any means. However, break's a break. If you guys are in, good for you. Get in below that 12,300-ish area. 12,300, 12,450 is really what we've kind of been watching. You can see us kind of wander down and around into these lower support areas. Did hold by the end of the day. Now, we're not that far away from where we started. However, point being, a move of 117 points or 1% is not bad. It's not bad. As I said, the Bears really needed to start to run this. The Bulls were definitely looking to win that little fight that was going on for the past umpteen weeks. It didn't seem like the Bears were all that interested, so they needed to make a move. And I really thought we would see some sort of a major move this week after the coil up we've seen over the past, week or two. And we did get a little bit of that today. Breaking below these levels, giving you opportunities to trade this to the short side. Now, where did they go? Right back into some support areas. The Dow looking a little bit more ugly, I should say, from a charting standpoint. But you can see where we broke below the support, came back, and are now holding it as resistance. If you're in, just keep your stops in place. Put your stops in and let this thing go. Let's see if it actually works out. Some of you might have taken profits at the end of the day. That's fine, especially if you're a day trader. It's okay to be doing that, depending on what your plan is. But if you want to get in and hold and see if this thing can go anywhere in the longer term, today was your shot. And you got an opportunity to kind of get in on it and see if it'll run to the downside in a continued move tomorrow. If we look at the daily, you can see the big candle that we put in, finally breaking below these lower levels. What we had been seeing up to that point was that bull pullback. We talked about it. I mentioned that the Bears are going to have to do something to change my mind on it. When they broke these levels, that would be a good start. So they did that this morning with breaks of this lower level here, showing us a little bit of bearish action coming into the market. I don't think the volume is accurate. I'm going to assume that that's not right. So if it is, wow. That would be pretty spectacular, but I'm assuming that Stock Charts needs to do an update there. Looking at it here, though, you can see us coming down into these lower support areas. These are some of the areas I talked about once we broke 12,300. Watch for the 12,200, 12,150-ish area on your first target areas for the bear move. NASDAQ doing the same type of thing, dropping down and into this 2,300 area. Even got a little bit lower than that. We saw the 2,290 area hit, coming back into these lower support areas, reaching back to about the end of March here. You can see us kind of hitting off these bottoms, not able to get back above these moving averages here. Yesterday we saw a nice flat stop right at the 200. Today broke that in a what? In a gap. If you can't beat it, gap it. It did it today. Gap down, ran a little bit sideways, making a 16-point move to the downside and showing a little bit more relative strength, I guess, than the rest of the markets, if that's what you want to clue in. But looking at the daily, you can see it's just coming right back and sitting at and on the 20-day moving average. That's what it's really, really going to want to try to hold now coming into tomorrow's trading. Will the bulls push this up? I always give the bulls a chance, or the bears a chance, to kind of react the day after we see a move like this. We've been seeing this really nice, tight, what was a bull flag moving itself backwards, now broken today and getting a little bit more on the bearish side. Next levels below where we are here are going to put us back around 2275, 2270-ish. I'll just drop that area into about a 2270, 2275 area to the downside on the NDX. And from a weekly, this is what's holding us up right now, the 20-week moving average, as it sits very comfortably right at and on this level. That is absolutely what the bulls will want to try to hold before the end of the week. Now, we've got a few days left. These are weekly candles, can take a little while, so we'll give this time to work its way out and see where this closes by the end of the week. SPX 60-minute came down into the 200, just below, ran back above, sat on top of it by the time it was all said and done with. More importantly, though, the 1320 area, that was a shot to the downside. We had more aggressive opportunities at 1330 and 1325. This was especially talked about on my subscribers video. For those of you that are part of this subscribers video, you know that I had us in at either 1330, 1325 as more aggressive entries, 1320 being the more conservative entry. You can see it broke today, giving us an opportunity at about a 5-10 point gain. If you got out at the end of the day, fine. If you're still in it, just keep your stops in place. Maybe we can get a little bit more push by the bulls or by the bears coming into tomorrow, and that's what you're ultimately looking for, is this confirmation. That'll then drop us maybe into these lower levels here. Want to watch that very closely if we do get down into that 1300-ish area, because we will then start to break these moving averages. That's definitely something the bulls will want to hold. So do we get a break below it only to see a bounce back above it by the end of the day? Very common. I've seen it quite a bit in the past. That's absolutely what you're watching tomorrow. So if we drop further tomorrow and you're short below that 1320 mark I gave you, you'll want to move your stops down and let this thing just kind of play itself out. Take profits when you want. You guys can manage it the way you want to once you're in. It's completely up to you. But if you want to give this thing a little bit of room just to see if the bears can do anything more with it, that's how you want to play tomorrow's trading. VIX then was up 3%, not a major move. So still, even in this move to the downside, the VIX isn't overreacting by any means whatsoever. It's good, it's bad. I mean, it's good if you're an options trader because it does still give you an opportunity to get in at a pretty low premium on your options trades. But it's bad from the standpoint that if you're bearish, you really do want to see this thing start to spike. You want to see some real movement, some real, if you will, scare tactics being taken from the options traders themselves. Right now, nothing major. We're still in that 17 range. I like it, more above that 19-20 range. Just no real confirmation quite yet from the VIX. Apple 60-minute moving up $1.60, which is, nice from the standpoint that the NASDAQ was down. The NASDAQ composite was down about 1% for the day, and Apple started to bounce right at this 330 mark, which was, as I said yesterday, a major support line here for Apple. So it's kind of bucking the trend. Very common of Apple to do that, but let's just look at it overall. It's been down quite a bit, falling into these lower levels, really in kind of a major drop. That 1330 level gets broke. I'm looking at one of these two lower levels to be hit in the near future after that. You want to watch that for a trade if you are trading Apple one way or the other. And now being below the 20-week moving average for a few days does not help things at all from an Apple standpoint as well. 338, it's a $6-7 move now to get back up and above and reestablish itself above this moving average. Going to want to watch that closely. I think the bulls want to try to recapture that, but that's quite a move, especially if the markets continue downwards. It won't have a lot of support for Apple. We'll see if it tries to get a mind of its own and just run the direction it wants to run. But otherwise, below that 330 mark, you'll want to be very cautious if you're long Apple. FAS also showing us a move to the downside. Then what did it do? As financials do, right back up again, coming into overhead resistance and sitting comfortably right at and around this $30 mark. Looking at it from a daily perspective, you can see it bouncing right in between the 20-day and this overhead resistance. The gap down did not help us today with our trading. We were looking for something maybe below that $30.50 mark. Couldn't get it really because of the gaps. These gaps get a little bit tricky. They are difficult to play. So now we're trapped between these levels. You're going to be watching moves below $30 and above 30. Man, I'd probably wait for a move above 31 before I started to get bullish on this. But I'd say below 30 and above 31 for any kind of moves coming into tomorrow's trading. Ultimately below the 20-day. So let's make it, below the 20-day, which is right around 30 and should be right at about $30 coming into tomorrow's trading. But just watch this carefully if you're looking to trade FAS one way or the other. And FAZ now breaking out of this little channel we saw to the downside, coming up and hitting its head where? Perfect overhead resistance. This FAZ has been a kind of a pretty chart here lately. I've been kind of liking this one as opposed to the FAS chart. I just think it's been a lot more clear. As we break, we come back, we retest, we come up, hit overhead resistance, come back into support. This is absolutely textbook trading here, guys. If you guys, once again, if you're not familiar with how to play this or how to see this, this is just fundamentally easy, really, from a trader standpoint. We get a break, we retest, and we go to the next upper resistance. We come back into support, and now we're just kind of chugging along in a nice little new channel that we've been setting up. The bigger daily is still putting us in or around these moving averages, which I talked about to the overhead side. Really above 41 maybe if you want to get aggressive. I still, from a bigger, longer term perspective, like it to get above 43ish now or so before I start getting more bullish on this. I know that's a ways away, but if you want to hold for any period of time, that's what you want to wait for. So above 43, below 37 are really your trades here. Shorter term day trading, it's been really well, it's been kind of easy here with what we've seen just based on this chart alone. If you guys know how to draw these lines, have these things in the right places, you can see it doesn't necessarily make trading easy, but it can make it a lot more simple. It can give you a lot of good ideas for targets, give you good ideas for when to get in, when to get out, just the simple things, at least allowing you to get more consistent within your trading. And I think that wraps it up for today. So still stuck in these moving averages, waiting for breaks one way or the other now on this area here. So you wanted above 41 more aggressive, above 43 for the more conservative and the longer term holds. You can still play this if you're comfortable with what you're doing. Still able to play this both up and down on a daily basis, but watch the financials. They're really struggling right now. They just can't seem to find their footing one way or the other. That wraps it up for today. We'll see you again probably tomorrow. Got some stuff I got to complete tax-wise tomorrow, so I may or may not have a daily video out, but I will, as always, of course, have my subscribers video out for those of you that want to sign up and try that. Okay, otherwise, we'll see you either tomorrow or then again on Thursday. Bye.